Volatility expanded during the March 5th U.S. session as price interacted with overlapping session memory around the February Asia anchor. The sequence did not begin in empty space. It developed inside a structure that had already been established weeks earlier. The February 8th Asia session anchor remains central to the current environment. Multiple recent sessions continue forming around this location. The March 4th U.S. session anchor developed inside the upper portion of that earlier Asia range. Its position placed it near the mid-upper region of the February containment field. The market briefly extended above that location. Interaction moved upward beyond the immediate session boundary. But continuation did not persist there. Price rotated downward afterward. The movement returned toward an older structural reference. That reference was the lower boundary of the February 4th U.S. session anchor. The attempt to stabilize near that level was brief. Interaction appeared quickly. Duration did not expand. The following Asia session on March 4th developed near the upper boundary of the February 8th Asia range. This created another overlapping anchor. Instead of relocating structure, price began rotating around the center of that Asia session box. Movement remained active. Distance fluctuated. But position did not relocate. During this phase, the February 4th U.S. lower boundary was approached again. The test did not stabilize. Continuation attempts failed to hold that level for extended duration. Interaction returned toward the interior of the session range. Compression followed. The sequence therefore developed as repeated engagement inside overlapping session memory. The next transition appeared during the March 5th U.S. session. The session anchor formed near the same location as the March 4th Asia anchor. This created a stacking effect. Multiple session anchors began forming inside a narrow structural zone. Volatility then accelerated briefly. Distance expanded downward. The lower boundary of the March 4th U.S. session box was breached. But the movement did not immediately generate new structural territory. Instead, price returned again toward the central region of prior containment. This repetition matters. When session anchors repeatedly form around the same reference level, the market is not relocating. It is processing. Interaction increases. Duration remains uncertain. This is where volatility often expands without producing immediate structural displacement. During the following Asia session on March 5th, the session anchor formed directly below the March 4th U.S. session range. The location again aligned closely with the February 8th Asia containment zone. Price began rotating around the center of that Asia session box. Movement continued. Range fluctuated. But the broader structural center remained unchanged. Across 4 consecutive sessions, March 4th U.S., March 4th Asia, March 5th U.S., and March 5th Asia, interaction continued to orbit the same February reference. Structure did not relocate. It circulated. Time accumulated inside the same memory. The chart therefore reflects a sequence of overlapping session anchors negotiating space around a single structural field. And that process is still unfolding. While session anchors rotated around the February Asia memory, moving averages began separating in slope and distance. The 120 moving average continued rising gradually. Its slope remained positive. This indicates that the higher time frame structural weight beneath the market has not reversed. But the shorter time frame average began responding differently. The 20 moving average, which had previously expanded upward away from the 120 average, began turning downward. Distance between the two averages narrowed slightly. This shift does not automatically change structure, but it alters the local environment where volatility develops. When the faster average slopes downward while the slower average continues rising, the space between them becomes a negotiation field. Interaction increases. Direction becomes less stable. Price begins rotating between structural layers. This is exactly what appeared during the overlapping session anchors. Movement expanded, but persistence did not establish a new working area above or below the existing field. Instead, distance traveled temporarily increased before returning toward the center of the range. Compression followed expansion. Rotation followed displacement. These sequences often occur when averages diverge in slope but remain relatively close in distance. Volatility expands into the gap, but relocation requires sustained duration beyond it. That sustained duration has not yet appeared. Instead, the chart reflects repeated testing of nearby boundaries. Each test increases information about the containment zone. But until persistence forms outside that containment, the structural field remains active. The relationship between averages reinforces that interpretation. The rising 120 moving average continues to provide structural weight. The declining 20 moving average reflects short-term volatility adjustment. Neither state alone defines relocation. They simply describe the environment in which price negotiates. Inside that environment, compression can emerge even while movement appears active. Candles expand and contract. Wicks lengthen. Bodies narrow again. Distance increases temporarily. Then it returns toward overlapping averages. This creates a rhythm. Expansion. Return. Expansion again. Return again. These rhythms reflect structural negotiation rather than directional confirmation. Session anchors continue to appear inside the same field. Moving averages continue adjusting around the same center. And time continues accumulating around the February Asia anchor. This accumulation increases structural density. But density does not automatically produce displacement. It only increases the probability that future volatility will emerge from this zone. Whether that volatility produces persistence or rejection cannot yet be determined, because duration has not yet chosen a side of the containment field. And until duration forms outside the boundary, the structure remains in processing. Volatility behavior around the Bollinger Bands reinforces the same structural condition. During the March 5 U.S. session, the 20 Bollinger Band lower boundary expanded noticeably. The band opened downward. This indicated that volatility temporarily accelerated toward the lower side of the containment field. At the same time, the upper band remained relatively flat. This asymmetry matters. When one side of the Bollinger envelope expands while the opposite side remains stable, the market often reflects localized pressure rather than full structural relocation. The movement stretches volatility in one direction, but the broader range remains anchored. This is consistent with the earlier session interactions. Price briefly extended downward beyond the March 4 U.S. session boundary, but persistence did not stabilize there. Interaction returned toward the interior. The following Asia session on March 5 began showing a different behavior. The slope of the lower 20 Bollinger Band began flattening. Volatility expansion slowed. Distance between the bands stopped widening as quickly. The envelope began stabilizing. Meanwhile, the 4 Bollinger Bands displayed even more dramatic behavior. During the March 5 U.S. session, both the upper and lower 4-period bands expanded sharply. Short-term volatility surged. The envelope widened quickly, but that expansion did not continue indefinitely. As the Asia session developed, the 4 Bollinger Bands began flattening while remaining slightly open. The bands no longer expanded aggressively. They began moving sideways. This pattern frequently appears when volatility shocks transition into consolidation. Expansion first creates space. Then compression begins redistributing activity inside that space. That redistribution is visible here. Session anchors remain clustered around the February 8 Asia range. Moving averages are adjusting around that same region. Bollinger Bands expanded rapidly before stabilizing. All 3 elements describe the same environment. Volatility is active, but relocation has not stabilized. Instead, multiple sessions continue negotiating space around the same structural center. The February 8 Asia anchor continues to function as the reference point for this negotiation. The March 4 and March 5 sessions have repeatedly interacted with it. Expansion attempts have appeared. Re-engagement has followed. Containment has not been abandoned. This sequence does not resolve quickly. Markets often spend extended time processing inside overlapping structural memory. Each session adds additional interaction. Each test provides more information about persistence and rejection. But duration remains the deciding factor. And duration has not yet produced sustained acceptance outside this containment field. For now, the environment reflects volatility expanding, contracting, and redistributing around the same central reference. Session anchors continue to form nearby. Moving averages continue adjusting. Bollinger envelopes continue stabilizing after expansion. The structure remains active. And the market is still processing inside overlapping session memory.